All right, today we are digging into what looks like a golden opportunity, one that the market seems to be completely ignoring. We're talking about B2Gold. It's a senior gold producer, and its story is about to take a really sharp, and I mean really sharp, turn north, right into the Arctic.
So here's the puzzle, and it's one that has left a lot of investors scratching their heads. Gold is trading at a record $3,400 an ounce. I mean, it's just shattering records. And yet, B2Gold, a company that literally pulls gold out of the ground, has its stock just stuck in the mud. So how on earth does a gold miner miss out on a gold rush? That is the big paradox we are going to unravel right now.
You know, this quote really gets to the heart of the matter. While everybody's out there chasing the next big tech unicorn, maybe one of the biggest opportunities is hiding in plain sight, literally in the dirt.
So let's dive right into this golden paradox. What exactly has been holding this company back while its whole industry is just soaring?
So for the past year and a half, we've seen gold prices just take off like a rocket, right? Meanwhile, B2Gold stock has been crawling along. It's a disconnect that's been, well, incredibly frustrating for shareholders. But for some others, it just might spell a massive opportunity.
So what is the problem here? Well, it really all boils down to two words that have been spooking the market: CapEx and Molly. Let's unpack what those fears are really all about.
Okay, so you had two big worries swirling around this company. On one side of the coin, you've got them just burning through cash. I mean, like a furnace, pouring a fortune into building this brand new mine up in the Arctic. And then, on the other side, their main cash cow, the Fekola mine, is located in Mali, a country, clouded by a lot of political instability. So for a market that absolutely hates uncertainty, B2Gold was basically the perfect storm.
And let's just quickly define that CapEx problem. We're not talking about routine spending here. This was a colossal, once-in-a-decade kind of investment to build an entire mine from scratch, way up in the Canadian Arctic. That was the giant cash sinkhole that had investors so worried.
So, we've laid out the problems, right? The very things that landed B2Gold in the market's penalty box. But this is where the entire story pivots. We have arrived at what's being called the Arctic inflection point, the moment where everything changes.
And this is the absolute key takeaway from all of this. That whole era of burning cash and being uncertain about the future, it's over. And I don't mean it's a prediction, it's happening right now. B2Gold is literally flipping a switch from being a cash furnace to becoming a potential cash gusher.
And this timeline right here, it shows you that pivot happening in real time. So, check it out. The first gold was poured back in June of 2025. Now, yeah, they hit a little hiccup late last year with the mine's crusher, but honestly, that's not really uncommon for a project this massive. The key thing to know is this: that issue, it's been resolved, and the mine is now successfully ramping up to full production, like as we speak.
And here is what that ramp-up actually means for the company's risk profile. Just look at this shift. B2Gold is no longer just the moly company. With the Goose mine online, a full quarter of its production is now going to come from the safety and stability of Canada. This isn't just some small tweak, it is a fundamental transformation of the business.
So what's the bottom line here? It's not just about getting more gold, it's about getting safer gold. They're strategically shifting a big chunk of their production out of a high-risk region and into Canada, which, in the mining world, is what you call a Tier 1 jurisdiction. That means stable politics, predictable laws, and a huge reduction in the company's overall risk.
Okay, the story sounds fantastic, but does the math actually add up? Let's take a look at the hard numbers that are powering this new B2Gold.
First off, you just can't ignore the massive tailwind they have at their back. With gold sitting over $3,400 an ounce, the profit margins for a company like B2Gold, which doesn't hedge its production, well, they're just expanding like crazy. Pretty much every dollar the gold price goes up flows directly to their bottom line.
I love this table because it just puts everything in black and white. It's the old B2Gold versus the new B2Gold. See? The old company was all about heavy spending, that CapEx, and worrying about political risk in Mali. The new B2Gold, it's a totally different story. It's about harvesting free cash flow and managing what are, frankly, much more manageable execution risks. You've got production going up, risk going down, and that means its valuation, which has been discounted for so long, could be primed for a major re-rating from the market.
So what's the trigger? What's the catalyst that's going to force the market to finally pay attention? Well, all eyes are on one specific date, February 18th. That's the day the company releases its earnings results, and, more importantly, its official guidance for the year ahead. This is their moment to prove to Wall Street with cold, hard numbers that the new B2Gold is officially here.
Of course, no investment is ever a slam dunk. So let's be fair and weigh the arguments. Here's the bull case for why the stock could soar, set against the bear case for what could still go wrong. So the bulls, they see three main ways this plays out well. First, as that safe Canadian production becomes a bigger piece of the pie, the so-called Molly discount on the stock should start to shrink. Second, with the massive bills for the Goose mine now paid off, the company's going to have a lot more cash to return to shareholders, maybe through a bigger dividend. And third, it's just a much more attractive takeover target for a bigger miner who wants to add a world-class Canadian asset to their portfolio.
Now, on the other side, the bears are pointing to two very clear risks. First, there's execution. I mean, the Arctic is a really challenging place to work, and getting a complex new mine to run perfectly can definitely have some setbacks. And second, that moly risk, well, it hasn't completely disappeared. Fekola is still their biggest, most important mine, and the political situation over there remains a bit of a wild card.
And that really brings us to the final word here, the core of the whole argument. For years, B2Gold kind of looked like a classic value trap, but it seems like they finally found the key to get out. The idea is that the disconnect, this huge gap between the stock price today and its potential to just gush free cash flow, well, it's just gotten too wide to ignore. So the big question is, will the rest of the market wake up and realize it in time?